What's up, everyone? It's Cody with MoneyVest. So let's talk about SoFi stock, which jumped a little bit over 20% yesterday on the back of earnings, and earnings came in with a strong beat on both revenue and EPS. And not only that, they actually reported for the first time ever GAAP profitability of 2 cents per share in profit. So going to break down everything you need to know about SoFi and what they reported for earnings. We're going to take a look at their intrinsic value. Right now, trading just under $9 a share with a market cap of just under $9 billion. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. There's a couple more spots left for that investor early bird tier with that 16% annual discount that does expire in 2 more days. So again, links going to be down below, and we'd love to have you on board. If you have any questions, please feel free to reach out, and I'm more than happy to help and kind of help you through the process. Again, getting started of investing, trading, options trading, swing trading, whatever it is, we're here to help. And again, our community is also here to support and answer any questions. So again, link's going to be down below. We'd love to have you on board. So this right here were the products coming in with a 41% increase on a year over year, bringing the total to over 11 million. Very, very consistent growth here for the company. You can see the bar graph. This is what we like to see for any company that we're investing in, with very nice, consistent growth here. Galileo accounts also increasing 11% on a year-over-year basis, and now starting to trend back up to 145 million accounts. And this right here is lending products to 1.6 million, up 24% year over year. And financial services products sitting at just under 10 million, up 45% on a year-over-year basis as well. Quarterly performance, quarterly adjusted net revenue coming in at just under $600 million. That was a 34% growth, and adjusted quarterly EBITDA coming in at about $181 million, a very, very strong jump in overall profitability, 30% growth. And this right here is the overall trend, going from losses now to a profitable EBITDA here on an adjusted basis, of course, of $432 million, and that's a growth of about 21%. And of course, revenues coming in at just over $2 billion for the business as well. This right here is the fiscal year 2023 guidance, what they actually guided for and what they ended up reporting. So they actually came in higher than what the guidance was. So they came in at 2.07 billion versus their high guidance of 2.06 billion, and adjusted EBITDA coming in at 432 million, obviously beating expectations and beating their own guidance of $386 to $396 million for the company as well. Now, 2024, they expect to deliver tech platform and financial services growth of 50% or more versus 2023 levels, lending segment at 92 to 95% of 2023 revenue levels, and GAAP net income. This is what's interesting, GAAP net income of 95 to $105 million. So if you take a look at EPS of 7 to 8 cents per share, the valuation's very, very high right now. It's very expensive considering the stock's at $9. So if you do 0.08, 112 times price to earnings multiple for the company right now, which obviously is very, very expensive. And this right here is the overall breakdown for their lending segment between student loans, personal loans, and home loans and total originations. And if you come over to fiscal year 2023 and fourth quarter, what you'll notice is that the home loans originations were at $308 million, and that's slightly down from the previous quarter, but higher from the second quarter, significantly higher from the first quarter. And if you compare that to fourth quarter last year, 300% growth. Actually, 300% growth from 105 million to 308 million dollars here. Student loan refinancing and origination also up from 405 million to well over 789 million dollars, and home and personal loan originations also up from 2.8 to 322 million dollars for the company as well. So that's actually pretty solid, because we're starting to see that momentum back up for home loans, especially when you compare fourth quarter of this year versus fourth quarter of last year, 2022 versus 2023. And personal loans were something that did kind of scare me a little bit, because if you take a look at it on a year-over-year basis, we have seen a significant increase from 5.4 billion to well over 13.8 billion, right? So it's almost 2x in the last couple of years, whereas student loans have gone down because of the pause in student loans. So it's gone from 4.3 to 2.6 billion, and home loans have significantly gone down from 3 billion to just under $1 billion. So I really, really want to see this home loan segment kind of pick up, and this personal loan and student loans starting to kind of roll over a little bit, especially personal loans, because those are some of the riskiest sort of loan products in the market. And if the company's not able to recover, there's a higher default rate, then of course it's not going to be great news for SoFi. or any of the other lenders. Especially with home loans, you can at least seize the property and sell it for whatever you could to recoup some of that investment. So home loans are obviously a lot safer compared to personal loans or student loans. So this right here, that's really what I want to see in 2024 is a significant uptick in home loans, and student loans also pushing higher, except for personal loans, which are obviously a little bit more, consistently higher on a year-over-year basis, because investors are more inclined to kind of see that as a riskier lending product as opposed to home loans. Now, SoFi stock powers towards the best day in 18 months after big earnings milestone. So, if you basically plug in the number that they guided for, which, of course, if you take a look, I'm just going to reload this page here. And they guided for, what was the number? So they guided for about $105 million. So let's just say 100 million to be precise here, $100 million. And if we apply a growth rate of, let's say, 25%, and of course a P multiple, let's say 35 or let's say 40 right now for the company, and discount rate of 12%, 10% margin of safety, no share buybacks or dilution, we're looking at a fair value, give or take $6 to $7, and that's considering that the company can grow earnings by 25%. I believe that they're going to be able to grow at a much higher rate at 30%. So 30% I think is a lot more reasonable for growth rate. Now, P multiple, you got to really, ask yourself what's the appropriate price earnings multiple. I think 35, or 40 is going to be quite reasonable, at least to begin with, because this is a high growth company. And as the company becomes more profitable, they're going to be able to achieve higher growth rates and potentially demand a higher multiple. So this right here, 30, 35, I think is quite reasonable. So sub $7 would be quite okay for SoFi, considering that they have now turned the corner towards profitability, and that's exactly what Wall Street wants to see and likes to look at. And this is going to be that earnings forecast. You can see 271% growth in 2025, 103% growth in 2026, then over 50%, then 34%, then 25%. So these are some very, very strong growth rates that the markets are pricing in. So of course, 144 times price earnings multiple, that's going to come down to 12.5 to just under 10 in the next several years. So because of that higher growth rate, of course, earnings expectations being so high, the P multiple is expected to come back down. Now, pre-market, it is down a little bit over 2.5%. This right here is the entire technical analysis. Two really, really important support levels to watch at roughly around $7.95, $8. I think this is a very good price point, all the way down to $6.51. In my previous video, I also pointed out that every time it's come down to this level of close to $6, we've seen a massive rally here. And this right here was no different, coming down to that level, and of course, gapping up at over 20% once again. So very, very important levels to watch. First one's going to be at close to $8 and a much, much stronger, better support at roughly around $6.50, and a no-brainer buying opportunity in the $4 range for SoFi, considering that it's now back in the profitable zone for the first time ever. Hope you all enjoyed this video, found it helpful. Let me know your thoughts down in the comment section below, and what do you think about SoFi? Are you buying, selling, or holding this stock? And of course, I have been buying for every question you guys have gotten right over the last several months here. So not a big position for me, but yeah, reasonable position considering that you guys have been crushing it with all the homework and all the questions you guys have answered. So I've picked up some SoFi that I'm obviously up on right now. So I hope you guys enjoyed this video, found it helpful. Make sure that you drop a like, subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. And make sure that you do check out the links below for Patreon, because the coupon code 16% does expire at the end of this month. And as always, happy investing. I'll see you all in the next video.